What if I told you that the world's first bankers weren't kings or merchants, but priests? And that the first banks weren't marble halls guarded by humans, but sacred temples protected by gods? For centuries, history told us banking began in Renaissance Italy with the Medici family. But the truth stretches almost 2,500 years back to ancient Greece. There, temples weren't just places of worship, they were the financial backbone of civilization, holding treasures, issuing loans, and protecting wealth so sacred that stealing from them was a crime against the gods themselves. Yet the same system that fueled Greek prosperity would eventually crumble under war, greed, and the loss of faith. In the early Greek world, wealth was tangible, cattle, grain, or metals, but as trade spread across the Aegean, merchants needed a safe place to store their valuables. Palaces could be seized, markets could be robbed, but temples were untouchable. To steal from a temple wasn't merely theft, it was sacrilege, punishable by divine wrath. People began bringing gold, silver, and coins to temples like Delphi and the Acropolis for safekeeping. What started as pious devotion soon became financial innovation. Faith became the foundation of trust, and trust became the foundation of banking. By the 6th century BCE, Greece had entered its city-state era, and trade was booming. Temples overflowing with offerings began to lend money. The priests at Delphi managed vast treasuries, lending to city-states and merchants. Loans came with interest and were recorded on stone inscriptions. Defaulting wasn't just a financial mistake, it was a moral violation. In Athens, the Parthenon became the city's central bank. Its gold, including the massive statue of Athena, could be used to fund wars, ships, and public projects. Citizens and rulers alike trusted that divine protection guaranteed the safety and integrity of their wealth. This system worked because faith held it together. When the Peloponnesian War erupted between Athens and Sparta, the city borrowed directly from Athena's treasury. Money flowed to armies and ships, sustaining the empire. Yet as wars dragged on, cracks appeared. City-states raided temples for emergency funds. Some priests accepted bribes or lent preferentially to friends. Foreign invaders, like the Persians and later the Macedonians, plundered the sacred treasuries. Slowly, the divine trust that had maintained the system began to crumble. As temple banking declined, private bankers called trapezitai emerged. They operated in marketplaces, offered loans, exchanged currency, and provided more flexible services than the temples. Faith in divine protection was replaced by confidence in human institutions. By the time of Alexander the Great, temples no longer dominated finance. Their wealth had been absorbed into imperial treasuries, and their role became largely symbolic. Yet their influence lived on. Rome adopted many Greek practices, and later, during the Middle Ages, the Church and the Knights Templar became the next evolution of sacred banking. The rise and fall of temple banking teaches us powerful lessons. First, faith is the foundation of finance. The Greeks' money was secure because people believed in the gods. Today, trust in banks and markets plays the same role. Second, wealth always seeks power. Temples began as spiritual centers, but became political instruments. Modern financial institutions wield similar influence. Third, history repeats in symbols, not systems. Greeks built temples. We build towers. They trusted gods. We trust markets. Human psychology remains constant. Even today, the echoes of ancient Greece are visible. The Parthenon once held Athens' reserves. The Federal Reserve now holds nations' wealth. Delphi lent to city-states. The IMF lends to countries. The Oracle predicted futures. Algorithms predict markets. And when faith breaks, as in the 2008 financial crisis chaos follows, the system collapses, not from lack of money, but from loss of trust. Every civilization builds its own temples of finance. For the Greeks, they were marble sanctuaries. For us, they are skyscrapers and digital networks. Both are built on belief, and both can fall when that belief falters. The temples of Greece remind us that finance is never just about numbers. It is about trust, morality, and collective faith. Gold and stone may crumble, but human psychology remains the same. From the temples of Delphi to modern banking towers, the story is clear. Money survives only as long as people believe in it. Faith is fragile, but essential. When the Greeks stopped trusting the gods, their financial system collapsed. When we stop trusting our banks, markets, or governments, the same could happen. The rise and fall of temple banking is not just a historical curiosity, it is a warning and a lesson for the future. In the end, the world's first banking system shows us that wealth, trust, and power have always been intertwined. The Greeks transformed sacred spaces into financial engines, turning devotion into deposits, faith into loans, and belief into prosperity. Yet the system's collapse reminds us that no economy, no institution, and no temple of finance can endure without trust. Money is more than metal, it is belief itself. So as we navigate the modern financial world, it is worth remembering the lessons of the past. Faith, integrity, and trust are not optional. They are the foundation. From the ruins of ancient Greece to the towers of today, history tells the same story. Civilizations rise when people trust their institutions and fall when that trust fades. The temples of Greece may be gone, but their message endures. They warn us to respect faith, guard trust, and never take for granted the invisible bond that makes all money meaningful. If this journey through history fascinated you, subscribe to Finance Legacy to uncover more stories where money, power, and human nature collide. Because understanding the past is the key to navigating the future.